AI is a technology of abundance. You can create anything you could possibly imagine with AI, and the result is just an explosion of new information, new creativity in the world. And crypto, on the other hand, is the technology that is fundamentally about scarcity. Scarce digital assets, the ability to own digital property, is built on top of this idea of scarcity.
You're tweeting about what the next NFT marketplace should look like and asking for suggestions. Where are we now? What needs to happen for this to become more useful or more important than it is?
I think NFTs are still incredibly promising. The number of actual non-fungible tokens on blockchains is going to grow many orders of magnitude over the next 10 years. What we've seen is there's less interest in the consumer speculative side of that. And hopefully there's going to be more interest going forward in the developer opportunity. And the new opportunity is just build a product people want that utilizes ownership as a keystone of the user experience.
Hey, I'm Mario, and this is the Generalist Podcast. As the saying goes, the future is already here. It's just not evenly distributed yet. Each week, I sit down with the founders, investors, and thinkers who are already living in that future to help you see what's coming next and understand it more clearly. Today, I'm speaking with Jesse Walden, the founder and managing partner of Variant, an early-stage, crypto-focused venture capital firm. In my opinion, Jesse is one of the industry's clearest and most differentiated thinkers, something he's exhibited across multiple cycles. In our conversation, we discuss where crypto is today, the biggest strides the industry has made since 2022, where Web3 still lags behind Web2, which teams are best positioned to win, and the intersection of crypto and AI. You'll learn about the state of stablecoins, why the NFT trough of disillusionment won't last, and what to expect from DAOs 2.0. I walked away from this conversation with a crisper sense of where crypto stands, the catalysts driving the current cycle, and where we might be headed next. Jesse's ability to see and articulate the technical primitives, economic forces, and super narratives at play make this essential listening for anyone interested in understanding the industry right now. This is a new podcast, so if you like it, I hope you'll consider subscribing and joining us for some of the incredible episodes we have coming up. Now, here's my conversation with Jesse Walden. Jesse, thank you so much for being here. Maybe to kick things off, we could start with a little introduction about you and your work at Variant. How would you describe what Variant does and your sort of role within it?
Sure. So yeah, I'm the founder and managing partner of Variant, and we are an early stage crypto-focused venture capital firm. So that means we invest in founders at the earliest possible stage who are building in and around the crypto and blockchain space.
Awesome. I think one of the reasons I've been so excited to chat with you is you consistently have some of the most interesting and differentiated ideas that I come across in crypto, and that's been the case now through at least a couple cycles. One of the ways that I think you define your work at Variant, which I thought was really interesting, is that you believe all of the world's value will one day be tokenized and on-chain. Why is that something you believe, and how have you come to that belief?
I would answer this by way of analogy, which is always imperfect. But I think that tokens are very much akin to packets of data. Packets are the kind of core unit of the internet protocol. And so if you kind of take the really zoomed out view, what the internet's done over the last 20, 30 years is it's turned all the world's information into packets. Packets are this kind of empty container that can move any type of information across the internet. As a result of the internet's growth, we figured out ways to program all the world's information to fit these packets and move them instantly anywhere in the world. I think a good proxy for thinking about crypto tokens is to think of them as sort of like packets for value. They are similarly these empty containers. You can program them with any kind of value, and blockchains enable you to move tokens instantly anywhere in the world. And so to tie it together, just as we turned all the world's information into packets, I think we're going to turn all the world's value into tokens, and we're in the very early innings of that.
And just to sort of draw that thread even more fully for folks who are maybe sort of thinking about some of this stuff for the first time, like, why is that the superior way to transfer value versus some of these other data packets from the past? What is the sort of obvious advantages that you think, okay, this is clearly the way that things end up?
Right. So the reason that all the world's information is packets is because the internet protocol is this open permissionless protocol, and that the entire world now speaks that protocol. The world's machines speak that protocol. So the open permissionless nature of it is what caused it to be globally adopted. It's a standard, right? And as this foundational standard, everyone could use it without fear of it, getting changed or charging them rent. Public blockchains are very similar. They're open permissionless networks. Anyone can build on top of them, and they have very strong guarantees about their security, their reliability. And so tokens running on top of these permissionless public blockchain networks are very much like the internet protocol itself. Tokens are a standard that anyone can use, and this is the reason that tokens are becoming more and more pervasive and increasingly capturing more of the world's value. Whereas prior standards are proprietary, they're managed by nation states, by companies. They're not interoperable. They're difficult to build on top of. So it's the open permissionless nature that led to the internet success. Similarly, it's what I believe will lead to public blockchain success and success of tokens, capturing all the world's value.
Amazing. Well, to sort of take a step back and think about where we are a little bit, I don't know what you would say. Are we at the start of a new cycle, midway through a new cycle? How do you think about this moment in crypto?
Yeah, I would say I'm not a macro economist, but it does seem like every 4 or 5 years we get some kind of observable pattern in certainly in crypto markets, and I think markets more broadly. So exactly where we are, I couldn't tell you. If you take a really kind of zoomed out view of crypto, I think it's been very steady progress over the last 15 years, which is about how roughly how old the entire industry is. So within the 4-year, 5-year view, there's been a lot of ups and downs, a lot of volatility. But from the zoomed out view, it's a very steady up and to the right march of progress.
Yes. And speaking of those sort of moments of volatility, obviously, 2022 was when sort of we had a, beginning of a new winter a little bit. Over the years since, there's been sort of, as you mentioned, this sort of march back upwards and sort of keeping with that trend of up and to the right. When you look back at, where we are today and when things really sort of, for the broader view, fell apart last time, like what are the main things that are different in crypto 2025 versus crypto 2022 in your view? Like, what did we learn from this cycle? What did we get out of it? What can we sort of point to as the main points of progress in your view?
Well, yeah, there's been a lot. I mean, I'll start with the most zoomed out view, which is, as I was just saying, over the past 15 years, it's been this steady march up and to the right. And within that 15-year span, there's many of these kind of fractal up and down cycles. And I think what you can kind of look at each of these cycles as is a kind of microcosm of Carlota Perez innovation hype cycle, where you start with this kind of invention. There's this explosion, a lot of speculative frenzy around this new idea. That speculation leads to a lot of investment, and very often the investment is productive in some ways in that it funds infrastructure, funds build out. But of course, the expectations get ahead of the fundamentals, and eventually there's a correction, and during that correction, a lot of people within this space find themselves in this sort of trough of disillusionment. But there was a core there usually, and out the other side, you find yourself on this steady slope of productivity. That's the Carlota Perez hype cycle, and I think you could look at the last market cycle, which is probably the most pronounced to date. 2021 to 2022, we saw the kind of inflated expectations and speculative frenzy. And then on the other side of that, FTX, there was this kind of trough of disillusionment for the better part of 22, 23, and 24. There's been a lot of progress throughout that period. The high level is what I would say is a lot of things in the space are well on their way to productization, which I would say is, on their way up the steady slope of productivity. These are things that were invented, 10, 15 years ago. So case in point, Bitcoin, right? The granddaddy of the space. It was invented in 2009. Today, I think it's safe to say it is being productized as a store of value. Institutions, governments are buying this product as a store of value. Stablecoins are another example where, stablecoins have been around now roughly 10 years. but they're now sort of hitting a scale and velocity of growth that I think really signals they have very strong product market fit. They are being productized. I think DeFi is also on this steady slope of productivity. And so that is, I would say, the thing that is probably most different is there's a number of things in the space now that are on this steady slope. They're being productized work and they're no longer in the invention phase. Simultaneously, there's a bunch of new things that are kind of more early in this trajectory and are still in the invention phase. Some of them are probably overhyped. But it's that sort of continuous cycle that's playing out at a micro or fractal level within the space consistently. And there's now a lot of things on this march of productivity.
Stablecoins is, I think such an interesting one. I think people come to crypto from lots of different angles, and, probably everyone gets into it in some respect because of Bitcoin and ETH and stuff like that. But, beyond those two, for me, I would say the thing that really got me excited in some of the earlier days was the stablecoin idea, the idea that, you can sort of, especially across emerging markets, maintain some degree of, security around the wealth you earn and protect against inflation and all these sort of things. And it has been so interesting to see how it's developed recently. You had some really interesting writing about stablecoins where you talked about the idea that they're both a consumer convenience and a messaging protocol. And I thought that was like a really interesting way of talking about this thing that, at least at one level is very simple. It's, a dollar digitally in some respect. What is the sort of like the two pieces of that for you? And like, what does that say about the advantages of stablecoins?
I realized I actually didn't fully answer your prior question, which was sort of what's different now, right? In the cycle and asking, double clicking on stablecoins just made me realize I should have addressed this because it's probably the single biggest difference beyond what I was just describing, and that is like the regulatory environment has completely changed in crypto, really since the election in November. And today we're a couple weeks into the Genius Act, passing. And the Genius Act is the first crypto legislation in the United States. It's also the most bipartisan legislation to pass in the United States, I think, in the better part of a decade, which is to say that it's not just the new administration. Both sides of the aisle are excited about crypto and specifically about stablecoins. And so I think that is, you can't understate how big a deal that is, or you can't overstate how big a deal that is. Really, the entire 15-year cycle that I was just describing of invention to productization happened, under regulatory uncertainty, and for a lot of it, not just uncertainty, but like an adversarial regulatory environment.
Can you give folks like the quick sort of précis on Genius and what it really means?
Yeah, I mean, at a very high level, it sort of just sets clear rules of the road for how stablecoins are to be issued and managed, and so you can think of it sort of belonging to the class of financial regulation that keeps banks, or is intended to keep banks safe and on the right path, right? It's, you want banks to be have a regulator, you want them to be audited and have certain reserves. And the Genius Act is very similar, but for stablecoins, it sort of describes who can be an issuer, how to qualify, what type of reserves are acceptable, and so on. And so the result of this legislation, we think, is that you're going to see this productization of stablecoins really accelerate as banks and the whole kind of traditional financial markets start to adopt them at scale.
Amazing. And so, yeah, to pull us back, this regulatory change is one of the big things that we did not have in 2022, and the sort of level of certainty around it.
Right. In fact, we had the exact opposite. We had kind of no regulation. We had kind of an adversarial regulatory environment in the United States, and the result was a lot of founders going offshore, where there was even less oversight, and that ended up causing a lot of the problems that that set the space back in 2022.
And so, to go back to this notion of sort of stablecoins having this dual purpose of consumer convenience and messaging protocol, like, yeah, how did you sort of come up with that framing, and what does it tell us about the tech?
Sure. So first off, starting with the messaging protocol side of it, I think again, tokens are this kind of standard like packets. It is an open source standard, and sending stablecoins across blockchains you can think of this as a new messaging layer similar to Swift or ACH. These are messaging protocols. Different about stablecoins compared with these legacy messaging protocols is that with stablecoins, the medium is the message. And what I mean by that is the legacy messaging protocols for payments, Swift and ACH, they you send a message and it's up to the bank on the receiving end of the message to update their internal ledger. With stablecoins, there's one global ledger, and when you send me $1, I have one more, and it's a bearer instrument. What that means is, the message itself contains the payload, which is the token, and as the holder of that token, I've got it. I can spend it immediately. If I'm a developer, I can program it, right? So it's a lot more flexible than legacy protocols where you're dependent on this third party at the end of the message to kind of update their internal system. That's the key difference in the messaging protocol part of it. Is the stablecoins and all crypto tokens are bearer instruments, meaning whomever receives the message essentially has the asset and do with it what they will. Now, in terms of consumer benefit, I touched on this a little bit. Stablecoins being sent over this new rail public blockchains, faster, cheaper, global, and more programmable. Those are the consumer benefits. Programmability, I think, is a huge one because it unleashes developers to build experiences for consumers that are much better than what the legacy systems can offer them. Today, we're seeing a lot of those benefits, fast, cheap, global, programmable, show up and sort of get widely adopted for things like cross-border payments or dollar-denominated savings products. And these are things that are primarily of value outside of the United States, where access is challenging or cost is challenging. A lot of the convenience today is being realized outside of the U.S. Here in the U.S., stablecoins are not yet convenient for two reasons. But I think they both have a solution. So the first is they suffer from a classic sort of network effect problem, right? Where if no merchants are accepting stablecoins, they're not convenient to spend, right? But I'm really excited about the potential of using and specifically programming incentives to bootstrap payment networks that are denominated in stables. So again, the cool thing about stable coins is they're programmable. Developers can kind of do anything you want with them. Stable coins could potentially be earning yield in DeFi. They can be earning a yield from the treasuries that are backing them. So I do think in time we'll start to see some of those kind of incentives be used to bootstrap the network effect that make them convenient for payments, even here in the US. The second problem or second inconvenience in the US is on and off ramping. And this is really true globally. But again, the other benefits of them being faster, cheaper, and global out, in the rest of the world offset this inconvenience. But in the United States, we all know it's a pain to on and offboard to crypto, including stablecoins. It's kind of a UX nightmare. You got to log into Coinbase or an exchange and move money in, wait, move money to your wallet. This is, I think, one thing that the Genius Act addresses head on. So again, anyone can become an issuer. Anyone can start to touch stable coins. And so I think you're going to start to see banks custody stable coins, enable their users to access them much, much more easily than they can today. So anyway, that's sort of a rundown on the convenience of stable coins, like where it exists, where there's still room to run. And I think all the issues today are going to get worked out in the next 2 to 5 years, and that's when you're going to really see them hit escape velocity.
With Variant, how have you ended up sort of playing the stablecoin opportunity? Like, have you guys sort of been a part of any of the stablecoin neobanks or more on the infrastructure side? Or is it still the case that like actually maybe the one that you're really looking for hasn't arrived yet, and it's these sort of net new networks that you're looking for?
All of the above, actually.
Okay.
So we're very excited about stablecoins. What I would say is, we've been investing in what we know best, which are sort of crypto native opportunities. And so I think directly downstream of the growth of stablecoins is growth in the underlying infrastructure, right? It's very cheap to send a dollar, but it's not free, right? And so at scale, we think stablecoins, and they already are going to generate a lot of transaction fees for the blockchains on which they move. And of course, we're invested in many of the leading blockchains where stablecoins are, including Ethereum. We also think that directly downstream of stablecoin growth is growth in DeFi. We're investors in decentralized exchange protocols, decentralized lending protocols, which are some of the venues where you're seeing stablecoins really show up and grow at scale. And we think that's going to continue. One of the companies in our portfolio, or projects rather, is Morpho, and Morpho has this integration with Coinbase where you can borrow dollars against crypto. So if you've got some Bitcoin, you can go on Coinbase, borrow dollars against it. Those dollars you're borrowing are stablecoins. A couple months into this partnership, they've got over $1 billion of Bitcoin being used as collateral, and roughly 50% of that coming out in dollar-denominated stablecoins. So we think that with Genius, that's really going to accelerate. And then we're also investing in kind of stablecoin pure plays. Genius, we think, is going to result in the issuance of thousands and thousands of stablecoins, and again, they're being deployed over multiple chains. Fragmentation becomes a new problem to solve, and we made one investment there in a company that's trying to solve that fragmentation. And I would say increasingly we're looking for founders who are bringing the kind of consumer convenience to end customers. We typically invest in the Western Hemisphere, and as I was just describing, we think there's still kind of friction that needs to get erased, and that's going to happen over the next 2 to 5 years. So we think there's opportunity to come at the consumer level too.
We talked a little bit about Genius and some of this regulatory shift more recently. One thing that I've been thinking about, in the new sort of political environment is it possible that this gift gets curdled somehow? Like, is this new regime so positive on crypto that we sort of push it too far, and the abuses that can happen in this system get so exacerbated that it actually sort of in the fullness of time creates an even bigger backlash next time? Like, is that something that you worry about at all?
I would say I'm more optimistic than I've ever been about the being like getting it right, basically. What I will say is that it's still the case right now that there's there's a few milestones in terms of policy that we have not hit yet. So Genius was the first, and frankly the biggest one, biggest success in terms of policymaking the industry's had. But there's a number of other irons in the fire, namely, market structure, which is currently going back and forth between the House and Senate. There's also rulemaking going on at the agencies, the SEC, the CFTC, and so on. There's also a really high profile case being heard in federal court right now concerning Tornado Cash, which really has implications for the whole crypto space, and that's to do with whether developers are liable for writing open source software. So there's a number of these kind of things in flight right now that need to land in order for crypto to succeed, and specifically for good actors in crypto to succeed. So the lack of regulatory clarity over the last 10 plus years is what has allowed bad actors to succeed, and the bad actors are the ones that have created all the problems and setbacks for crypto. So we're still, I would say, in the thick of it. We're kind of in the fog of war, where even the president himself is launching a meme coin and doing things that a lot of folks in the industry aren't that excited about, frankly.
Yes.
At the same time, it's the current administration that is working on all four of these kind of policy legs, and that's very encouraging, right? So I would say the key to avoiding the scenario you described, where we do have kind of another massive setback, is landing the plane on those policy initiatives, getting the rulemaking right, getting market structure legislation done, because that's what's going to enable the good actors that kind of keep us on the right side of things.
Yeah, you mentioned the meme coin story, and I think when you look at the last cycle of crypto, you have stablecoin productization, you have so much institutional interest with the ETFs, the regulatory changes, all these things, and then I think the most sort of consumery part of it has been this meme coin craze, which from my vantage, and I'm sort of always just keen to be open-minded, so maybe you'll push back and take us in a different direction. To me, I'm like, this is literally the last possible thing crypto needed, based on the cycle beforehand. When you look at it, Is there anything about it that you're like, maybe there's a positive externality here that, we do get something productive out of this? Or do you just see it sort of like in keeping with a lot of the, behavior that has been the part of this industry that's really been holding itself back in many ways?
Yeah, it's a nuanced question. I got a lot of thoughts here. I would say, there's two things that have been working in crypto indisputably over the last couple of years. And those two things are on a barbell. They are like polar opposites of one another, and they are speculation and stablecoins.
I'm all in on that. I love that.
Always worth a dollar, non-speculative. Like that's the purpose of a stablecoin, and it's working. On the other hand, speculation. Bitcoin is the original speculative asset in crypto. And there's been a number of other speculative experiments along the way, including meme coins. And meme coins have really hit a stride over the last couple of years. The meme coins have been around 10 plus years, Dogecoin being the biggest, right? But, they really hit escape velocity over the last couple of years. And I think, the fastest company, not just in crypto, but $2 billion revenue is Pump Fund, which is a meme coin launchpad. The reason these two things are working on both ends of the spectrum is the same, which is that the infrastructure that enables both has finally gotten good enough. So stablecoins, fast, cheap, global, is a result of the infrastructure improving. Similarly, going from Dogecoin, which was a fork of Bitcoin that was very technically complicated to pull off, to anyone being able to upload an image and launch a coin in seconds is also a result of fast, cheap infrastructure. And so in a way, I would say I'm not surprised, right, that that stablecoins were kind of one of the dominant games in town, because it's a result of this kind of fundamental progress at the infrastructure layer. And both stablecoins and meme coins are ideas that have been around for 10 years, and they just got to their final form or somewhere closer to it. Double clicking on meme coins specifically, I think there's no question that there's a casino element to it. I think another way to look at meme coins is as a kind of a weighing machine for something that's very valuable on the internet, and that is attention. Right. So attention on the internet we know is very valuable because it is monetized typically with ads, and social networks monetize it very, very effectively. I think meme coins are a market that quantifies the value of attention on the internet directly. So if you look at the price chart of a meme coin, right, very often it's spiky, it's up and to the right, and then it's kind of straight down. That the shape of that chart looks very similar to the shape of the chart of virality of a tweet, for example, or social media post. When something's going viral, it spikes up, and then very quickly it goes away. And so for that reason, I think meme coins as an asset class are not going away, right? It is it is a market that prescribes or puts a value on something that is very, very valuable on the internet, and that's going to continue to be very valuable, which is attention. And there's a lot of experiments going on with ways to enable creators to capture some of that value in the market. And so, for example, if you create a meme on Pump or on Zora, or with a protocol like Dopper, which is one of our investments, creators can capture some of the value that's being traded back and forth in these markets as a way to monetize their work directly. So I think it's not all bad. It certainly is consistent with a secular trend, which is more financialization, more markets in everything. And I don't think it's going away. I think we'll look out 10 years from now, and we'll see that the market cap of meme coins as an asset class, not any single one, but as a total kind of asset class, will grow many orders of magnitude from here.
Interesting. Okay, so the sort of best case scenario sounds like it's useful in that it sort of does chart this attention cycle, and so like there's some informational value in that, and then also maybe it becomes an interesting source for the internet vernacular of memes and the people who are sort of best at creating that vernacular to capture some of the upside in it. Is that
right?
Is that like a fair encapsulation?
That's right. And I would maybe suggest broadening the definition from just like memes in the classical sense to just kind of media on, media on
Yes.
chain. And, memes are one variety, news is another. I think, when the Pope died, if you went on the front page of Pump.fun, there were all these memes about the Pope dying. And I heard from somebody that they found out about the Pope dying on Pump.
That's a hilarious indication of that person's information diet, right?
Right. But I think, if Zora is another portfolio company that's building in this space, and if you go on the Zora app, it's a social media feed, not Visual One, not unlike Instagram, but where every piece of media is also a token and has a market value, and that market value is kind of a new type of signal in terms of what people on the internet are valuing and paying attention to, and so you could look at it as just a new kind of way to curate a feed. It's an input to the algorithm. Zooming out, I think prediction markets are very similar, right? It's like there are markets for information, and there's a class of people speculating on the value of a given outcome, but there's also a lot of information in that market where people are learning about their news through prediction markets. They're learning about the outcome of the election before journalists are predicting it. And more accurately in many cases. And so there's a similar underlying trend where markets are creating new information. That information can be harnessed to produce news. It's broader than just laughs on the internet. It's all kinds of media, including news potentially.
I suspect this actually happened, like not just, meme coins around the Pope's death, but probably meme coins for each of the major candidates who were being considered in the conclave. And, in that way, it does, sort of, you get a peek into people's revealed beliefs, or at least, where they're willing to make a bet on the rest of the rest of the public. To go in a slightly new direction, you've written about the fact that, this stage of crypto is really less about these net new ideas and more about this productization. And we've talked about that now with stables and meme coins and all these other sort of pieces of it. When you think about like the teams and the startups that are like best equipped to win in this new phase, do they look like the same sort of teams that they did when, these use cases were maybe less legible, or is it a different style of company?
It's a good question. I do think that the shift from invention to productization is a meaningful one in terms of what the opportunity set is, and there's some teams that can kind of navigate that shift gracefully, and then there's a lot of new opportunity in the space as well for teams that are more well suited to productize versus invent. I'd say a lot of the opportunity today is more to do with execution, distribution, great user experiences versus like coming up with the fundamental primitives. That's not to say that there's no primitives left to be built. Of course there are. We're continuing to back teams doing that. But I do think that the kind of DNA of teams that we see coming into this space and where we think there's a lot of opportunity sort of resembles that of more traditional Silicon Valley startups where there's a very heavy focus on product, on user experience, on sort of growth. There's both traditional tools in the toolkit that you can bring to bear to execute. There's also new tools that are crypto native, and so you kind of need to find a mix of both the crypto native entrepreneur and the experienced kind of Silicon Valley entrepreneur, and so but that we're really excited about that. We're seeing them come back to the space. And again, I think that's because there's now kind of, progress and real hope that there's going to be a path to building here.
I think one of the things that, has been historically hard for crypto is like, the lack of this hyper performant infrastructure. And there's been so much investment in that over the years that it's gotten better and better. But also, some of these big user experience gaps that, again, feel like they've closed, but I think except in maybe a few cases, there's not real parity with Web 2. Like, how close do you think we are? What's missing? Like, what, on both of the UX and the infrastructure piece, like, how do you sort of benchmark that?
Yeah, so we've definitely made a lot of progress, but to your point, I don't think we're quite there yet. I'd say we're nearly there. So for example, it used to be the case that if you want to use any crypto app, the first thing you had to do is install a wallet and go write down this kind of 24-word seed phrase, which was your private key. And if you lost that, you lost everything. And so that's a pretty terrible user experience. Today, we have there's a number of companies. One, Privy was just acquired by Stripe. Our portfolio Turnkey which provide private key management and wallets as a service essentially. And so the result is you no longer have to do that complicated 24 word seed phrase. You just sign up with an email and you've got a wallet. And downstream of that is every mobile app becoming wallet aware or having an embedded wallet within it. That's huge progress. And outside, that wallet still needs to get funded, right? You still need money in it to transact on chain. And as we talked about previously, the on and off ramps are still a key point of friction. And I would say that there's a huge drop off rate in signups today because once you get your wallet, you have to go through this funding process, and that's still pretty janky. Again, I think that's going to change because of Genius, where you'll be able to get dollars from your bank account into stablecoins and into a crypto wallet much more easily over the next couple of years. Now, one of the other things that I think needs to change is that there's an increasing number of blockchains. There's applications on different chains, and interoperability between the chains is still kind of a point of friction. I had a friend texting me the other day, how do I get my USDC on Ethereum, to this application I want to use on Solana? And, it's not easy is the bottom line. I've always thought this is a huge opportunity for wallets to solve, and we're investors in Phantom, which is one of the biggest, wallets in crypto. And they are multi-chain wallet. They're on Solana, they're on Base, and they do enable kind of swapping between them. But I still think there's a lot of low hanging fruit to just make that kind of completely seamless and something that the user doesn't have to think about at all. What I would say is, zooming out, we've made a ton of progress. These are really complicated technologies, and we're pretty close to kind of putting polish on like the rough edges, but there's still a few rough edges protruding.
This episode is brought to you by Brex. Fred Adler, the influential venture capitalist of the 1970s, was known for displaying decorative pillows in his office that featured a signature business philosophy: corporate happiness is positive cash flow. In today's post-SERP environment, Adler's wisdom feels particularly relevant, as founders need to make every dollar work harder. That's exactly what Brex delivers. Their modern finance platform was built specifically for startups like yours and designed to help extend your runway when capital efficiency matters most. With Brex, you get global corporate cards with up to 20x higher credit limits and no personal guarantee required. Their banking solution has no minimums and no transaction fees, while letting you earn high yield from day one with same-day liquidity. Best of all, Brex knows you were born to build, not juggle spreadsheets and finance tools. Their AI-powered platform brings cards, banking, expense management, and travel all in one place. It's simple, scalable, and designed to get you back to what you do best: building. More than 30,000 companies, including 1 in 3 US venture-backed startups, trust Brex to help make every dollar count toward their mission. Join them at brex.com/Mario. You mentioned Phantom, which I also got to be a small angel investor in a few years ago. Amazing product, I think. And I think a good sort of example of maybe what like the next in line class of like really big crypto companies maybe look like. We obviously have had the big exchanges like Coinbase and maybe Kraken goes public this year and so on and so forth. But as you look at that maybe next in line set of secular winners, I think you've talked about like who's in that batch, alongside the Phantoms and so on and so forth.
Yeah, that's a good question. But by the way, I would say Phantom is a really great example of the team DNA I was just describing, where they're very crypto native, but the founders, Brandon and Francesco, both worked at Twitter prior to getting into crypto. So they have this kind of Silicon Valley experience. They've seen what greatness looks like. I think they've built a really excellent organization with a really sort of laser focus on delivering really great product experiences.
Yeah, absolutely.
Distribution. So yeah, Phantom is certainly one of the key secular winners. I think the opportunity for Phantom from here is enormous. Simple way to think about Phantom is the gateway to everything that the on-chain world has to offer. So it's very similar in some respects to a browser, right? Like the browser gives you access to the all the Web 2 applications. Phantom gives you access to all the Web 3 applications on chain. And because Web3 is financial, they sit right in the flow of all the value that users are transacting in that world. So I think very excited about Phantom. I think Uniswap is another, I think, secular winner, decentralized exchange protocol. Increasingly, DEXs are doing more and more percentage volume relative to their centralized counterparts. And Uniswap is the market leader and has been very dominant for a very long time. As all the world's value gets tokenized, that value is going to need a venue to trade. I think Uniswap is going to keep compounding as a secular winner as the biggest decentralized exchange. Morpho is another I mentioned already. Lending, right? Huge category in crypto. That's been driven historically by speculation, right? People wanting to borrow against their crypto to buy more crypto. But as we see more stablecoins, come online and other types of tokenized value stocks, the value of the lending protocol will shift into this less speculative, kind of more traditional case where people want to borrow against hard assets. So today, Morpho is, I think, the second or third biggest lending protocol. We think they've got the right kind of market structure and sort of focus on distribution. For example, the Coinbase integration that's already live, to really take it to the next level. As there's a secular tailwind behind them of stablecoin growth, which we think is going to be many orders of magnitude to go. So those are a few. WorldCoin is maybe another one that I would mention, where they're really in a category of their own. WorldCoin, of course, started by Sam Altman. What they're building is what they call proof of personhood. So a proof that you are a unique human as opposed to an AI. They're signing up over 100,000 people every day. Like at the current rate, I think they're set to onboard millions of people. This year they've already got north of 30 million installs, and the goal is to provide a kind of new form of identity for every human on the planet. They're in a category of their own, and I would say they are increasingly becoming a secular winner in terms of just the distribution that they've got, and that's another great example of a team with real Silicon Valley DNA, focus on distribution, while also understanding the crypto native opportunity.
WorldCoin's, a good segue into the sort of intersection between crypto and AI, I think. When I think a little bit about the teams that we're talking about that maybe do have that more traditional Silicon Valley DNA, one of the things that I could imagine being a little bit of an impediment to the next wave of crypto startups is that crypto now has to really compete with AI on the opportunity set. Like if you're a really talented builder today, you could decide, hey, I want to build something, around stablecoins and all of that. Or I could say, this large language model revolution or any other sort of associated part of this renaissance is more fertile and is better for me to spend my time on. How do you feel like crypto's faring from a talent perspective? And, has it struggled over the past few years?
Yeah. So no denying the fact that, ChatGPT was 2023, right? And that was a huge inflection point.
I think even 22, right?
Yeah. Sorry. Yeah, you're right. I think 22. And then, I think by 23, they had like the fastest growth of any consumer product or something. So there's no denying that, Silicon Valley loves to chase kind of shiny new thing, and ChatGPT was it. And so a lot of talent, over 22, 23, and the better part of 24 was going into AI. And I think, right, if you think about it, makes sense, right? Like, meanwhile, on crypto, even the best entrepreneurs, like, Uniswap and all these companies I was just mentioning, were like under investigation for 4 years, right? So like even the best projects, the best founders, the headlines about them were extremely negative. And if you're kind of college kid studying computer science, like, you got to make a choice. Are you going to go to where there's all this exciting, opportunity, or are you going to go where the government's trying to run you out of the country? So there was definitely a lot of reversal and inflows. That said, talent into crypto over the last few years. That said, like, I think Electric Capital did this data analysis, where if you take out the spike in talent that came into the space in 21, 22 and stayed for under a year, those would be described as kind of tourist entrepreneurs. If you take that out, the compound annual growth rate of developers in crypto has been growing at a very steady clip. I forget exactly. I think it was roughly like 20-25% year on year growth. And so I don't want to give the impression that like, talent is not coming in, because it has been very steadily coming in. It was just this crazy spike during the speculative boom and bust. But if you normalize, over a wider time frame, it's been compounding. And what I will say is, along with the shift in the regulatory environment, we've seen a meaningful shift in the number and quality of entrepreneurs coming into the space now. And that's because I think you're starting to see some of the secular winners, double down, win bigger, have their investigations dropped, right? I think talent that's been on the sidelines is looking at that, saying, hey, this has become a kind of contrarian thing, but there's actually a lot of opportunity here. And we're starting to see that result in more entrepreneurs getting off the ground. And in many cases, it's second time entrepreneurs, people who've been here for a long time, who are finding greenfield, new opportunity, ideas they wouldn't have executed on a year ago, and that they're coming back to do now.
Yeah, that's interesting. Normalizing that big spike, because that's also just anecdotally something I'm sure you saw a ton in your seat as a VC, of just like the number of crypto to AI pivots in 2022, 2023,
Yeah.
where you did have a lot of those folks who I think were dipping their toe in, and then the water got really, really cold, and they, for better and worse, decided their talents were best devoted elsewhere. But that's interesting. Okay, so things are sort of trending in a positive direction when you sort of look at it from a little bit more of a zoomed out view.
One thing I would share is, like, in our portfolio at Variant, we had a handful, like, maybe 2, 3, certainly less than, I want to say even less than 5% of our portfolio pivoted from crypto to AI. If I had to attribute that, I think there's been much higher, rates of attrition than what we've seen in our portfolio. And that's because I think one of the things we screen for at Variant is we really want to invest in founders who are doing their life's work in crypto. We invest at the earliest possible stage. So, like, very often we assume that the idea that we're being pitched is going to change and evolve with the market. So the thing that we really index on is, is this person here to do their life's work? Even if the idea changes, are they going to stick with the general kind of scope of or intent of the the thing that they're pitching? And so most of our founders have stayed in the crypto space through thick and thin, and like we really want to be the best partner for entrepreneurs who are going to be here for the ups and downs. And so that's why I think we've seen very low attrition in our own portfolio.
Well, I can't help but dig into that a little bit, but it doesn't surprise me in some respect, because I do think that, crypto in general is just such a high variance industry. I find that you meet some of the very, very smartest people you'll ever meet, and then a lot of the folks who maybe are not, are balancing the other end of the spectrum. And same for, you meet some of the most principled people possible who have really thought super deeply about their morals and their values. And then obviously you have the total other end of the spectrum. And on the founder side, I think you do have those tourists maybe on the one end, but then you have people who will truly walk through any possible brick wall because of their devotion to this technology and what it sort of signifies for them. What are your ways for figuring out if someone is doing their life's work? Like, have you found any ways that you're sort of able to get a feel for that in the moment and as part of a process?
So what I will say is, like, I think within the first 5 minutes of talking to someone, generally which side of the spectrum they're on. And very often it comes out when you hear the story as to why they got into crypto in the first place. And as you said, for a lot of people, it's some kind of principle about the technology that is really close to their heart or their motivation for working on the thing that they're building. And there's a lot. The great thing about crypto is it's such a multidisciplinary space. Combines deep technology with economics, with I would say kind of social norms, and even politics, right? Because the politics of how to govern these permissionless systems. And so there's a number of different reasons you might have gotten into crypto. Maybe you grew up in a country that didn't have a stable currency, or you had capital controls. Maybe you're just really fascinated by distributed systems where the control is with the edges of the network as opposed to the center. there's a number of different fundamental reasons why people get really intensely nerd sniped by this technology. And I'm not saying like, you have to have one of those as a like raison d'etre to be in the space, but very often, that comes out at the outset and you can just tell, okay, this person is here to do their life's work. And I would say during that blip in 21, 22, when there were a lot of tourists that were here for under a year, you didn't hear that. You kind of heard the opposite, right? Which is like you heard some story around how there was, an opportunity to just make a lot of money fast. And that's always been another facet in crypto. And so I like to think that one thing we're decently good at, and that we haven't been involved in any of the kind of blow ups or is just like sniffing that out. Why are you here? And are you going to continue to be here when things get tough?
Yeah, absolutely. To return to AI a little bit, I think on the one hand, there is just this like collision of buzzwords that's happening around some of this projects where you just feel like there's not a clear reason why AI and crypto should go together. But on the other hand, there are some really, I think, promising and interesting ideas. I think, the idea that we need to be able to prove our humanity to digital systems is a really, really powerful one. Where have the sort of collisions that you've spotted that have been most interesting when you think of that?
So I like to approach this, the question around AI and crypto in like two parts and two pairs. So pair number one is, you can approach it in terms of what AI can do for crypto and also what can crypto do for AI, right? And then separately, in another pair is just looking at the fundamental properties of each technology. And I think you can contrast the two by saying that AI is a technology of abundance, right? You can create, anything you can possibly imagine with AI, and the result is just an explosion of new information, new creativity in the world. And crypto, on the other hand, is a technology that is fundamentally about scarcity.
Yeah, totally.
Right, scarce digital assets, the ability to own digital property is built on top of this idea of scarcity. So that's a very high contrast way to pin the two off each other. And I think abundance versus scarcity is kind of why these two things are such a good fit and are going to propel one another forward. Let me come back to the first pair, right? What AI can do for crypto. One thing crypto is very good at is global, fast, cheap payments, right? We talked about that with stablecoins. I think we're very early in starting to see an explosion of AI agents that can do these very micro, highly specialized tasks. It's my view that those agents are going to want to be paid for their work, and that traditional payment rails historically, have not supported micropayments very well. Because the fees often, can exceed the value being transferred. And so as the internet evolves into a network of agents, I think, interacting with each other, via APIs, I do think that stablecoins will end up being kind of the preferred way to settle these very small automated payments, giving agents their own wallets to figure out how to transact without, oversight. So that's an example of what crypto can do for AI, right? You can enable these kind of micropayments. On the other side of things, huge amount of volume in crypto is trading, right? And a lot of the trading, especially meme coins, for example, is driven by sentiment.
Yes.
Unstructured data that you find on Twitter, on Telegram chats, on Reddit. And one thing AI is very, very good at is parsing all this unstructured information in the world and synthesizing it down for you. And so, I do think that AI will increasingly play a role in financial markets, including crypto. And we're starting to see more and more teams experiment with that, starting with the thing that's been working, one of the things that's been working in crypto, which is speculation, and using AI to make investing more efficient and drive better outcomes. So that's what AI can do for crypto. I've kind of saved the best for last, which is, and this is back to the camp of what can crypto do for AI? So needless to say, AI models, foundation models, large language models are very expensive to build. They need a huge amount of upfront capital invested in hardware and energy, right, to train models, to run inference. And today, it's the case that if you want to go work on one of the the frontier models, you need to go work at one of 5 companies, basically, right, in the West, right? Google, Amazon, Meta, OpenAI. Crypto offers an alternative to that world. One thing that crypto is very good at is using incentives to bootstrap massive networks of machines. Right, Bitcoin is I think the most powerful computing network on the planet, and that's because miners are able to earn this global asset. I think that what we're going to see is sort of a similar phenomena play out where we will build one of the biggest computing networks in the world, a network that is specialized in compute for AI, both for training and for inference, where a token is essentially coordinating the running of these machines.
Yes.
And the result of that is we can build actually open AI. We can build networks, build models that are not controlled by a single company, where any developer anywhere in the world can contribute to them without having to go work at one of those 5 companies. And this is exactly what Pluralis, which is a portfolio company, is working on. That team is 5 PhDs in machine learning. All of them came out of Amazon's Applied Machine Learning Research Lab. It was previously thought that doing training of large language models over a decentralized network was impossible. It was thought that you had to do it kind of concurrently in one data center. These guys have proven that impossibility to be false, and so that's probably the most exciting idea of what crypto can do for AI. We can build actually open AI that rivals the best proprietary models, because you have machines all over the world and talented people all over the world able to contribute to their development.
Wow, interesting. I've got to read more about Pluralis, I think. Okay, I could dig so much more into this, but for the sake of efficiency, I want to ask about sort of 2 big narratives of the last cycle and where you think they're sort of at today, what the sort of 2.0 versions of them might look like. And both are things I think you in particular have spent a lot of time thinking about. And I'm sort of talking about NFTs and DAOs. NFTs I know you're thinking about because you're tweeting about what the next NFT marketplace should look like and asking, for suggestions. So I suspect that one's a little top of mind. And then you had a really interesting post about sort of like what the 2.0s of DAOs look like. So maybe we should start with NFTs. With the sort of profile picture phase a little bit behind us, where are we now? What are we sort of like? What needs to happen for this to become more useful or more important than it is?
Right. So again, NFTs are kind of a flavor of the Carlota Perez hype cycle in 2021. They kind of went through their boom bust, and today I'd say they're probably somewhere in the trough of disillusionment. They're not yet on this steady slope in productivity like stablecoins and DeFi and Bitcoin. The way that I've always thought about the opportunity with NFTs is that NFTs can be the port of entry for all digital media. So not just like collectibles, highly valued speculative collectibles, but really like foundational kind of infrastructure that enables true digital ownership and exchange of any type of digital content.
And you really worked on this even before Variant, right?
Yeah, so 2014, I started a company called Media Chain, where we had kind of same idea, right? To make every piece of media, bring every piece of media in the world on chain, so that you could kind of know where it came from, its provenance, what it was about. All the information about that media could be accessible to anyone, just like a token is accessible to anyone instantly, anywhere in the world. And so, as a primitive, I think NFTs are still incredibly promising. And I think what we saw last cycle is that the kind of speculative fervor around collecting NFTs really squeezed out, any thinking around the kind of utility of the primitive itself. I continue to believe that NFTs are going to, be a thing. The number of, actual non-fungible tokens on blockchains is going to, grow many orders of magnitude over the next 10 years. But I think what we've seen is there's less interest in the kind of consumer speculative side of that. And hopefully there's going to be more interest going forward in kind of the developer opportunity. And yeah, I recently tweeted, asking, what are people thinking about building in and around NFTs in 2025? And I think the best response to the tweet was right along these lines, which is like, in 2025, you shouldn't necessarily be building a quote unquote NFT marketplace. You should be building, a product that has need for some digital asset that benefits from ownership. And so, maybe that's a game, right, where all the in-game items are NFTs, and the market around those, makes the gameplay better. So the concept of like a horizontal NFT marketplace for speculation, I think, was a 2021, 22 phenomenon. The new opportunity is like, just build a product people want that utilizes ownership as a keystone of the user experience.
Yes, I got it. It's not going to be the user behavior won't be, hey, I'm going to step into this digital gallery or storefront and sort of browse the different pictures or, items that I might want to collect. And instead it's going to be, I'm using this application, which happens to create, digital property that is given to me in some function.
Yeah. I mean, the headline story here, I think, is broader than just NFTs. It's, the shift again. It's from crypto as the what. Crypto was this new invention. Everyone was like, oh, what is that? And learned about it, and then the speculative kind of fervor took over. To today, where crypto is the how, right? Stablecoins, to most users are just dollars. You don't need to know or care that it's running on crypto rails. Similar thing is going to be the case with NFTs, where it's just how it works. You don't need to know or care that it's crypto. One exception that I think is an important one: digital art. There didn't have a market before NFTs. I think there is a really strong product market fit around digital art and NFTs today. I have a bunch of digital art on my walls and in our office, and a lot of the artists whose work we've got, they didn't have a means to monetize their work prior. And so that's going to continue to be one area where crypto is both the how, but also the what, right? You're buying the digital work, and you're buying it because it's an NFT on the blockchain. But for the most part, I think that the expansion and growth in NFTs is not going to be like that.
Amazing. Let's talk a little bit about DAOs. What were the lessons from the last cycle, and how does the 2.0 start to address that? Because there was a lot of excitement, but I think a lot of them just got lost in sort of designing by committee and the struggles of that.
So DAO, for those uninitiated, stands for Decentralized Autonomous Organization, DAO. And Vitalik Buterin, the creator of Ethereum, I think coined this term in a 2014 blog post, wherein he offers a definition that I really like, that I think we're finally starting to get back to now, and that we really got away from in 2021. And in his definition, he puts a lot of emphasis on the A in DAO, automaton, right? Decentralized autonomous organization. And he says, automation at the center, humans at the edges, right? And the A is at the center of DAO for that reason. In other words, DAO should really lean into automation, which is the superpower of smart contract blockchains like Ethereum and Solana. It's also the superpower of AI, right? Automation. And in 2021, we had a lot of experiments around DAOs. But I would say almost all of them had very little automation at the center. And in fact, it was humans at the center. It was the opposite of what Vitalik was saying. It was humans at the center and no automation. And so the 2021 version of DAO was an organization that was kind of owned by users, but functioned very much like a classic kind of cooperative, and not in the charitable sense, right? Like the best cooperatives, the biggest, there are multi-billion-dollar cooperatives. All of them have adopted a management structure that looks like a corporation, which is kind of a tested and true way to scale an organization. The cooperatives that haven't succeeded typically, one reason they fail is because they are being managed by committee. There's a lot of bureaucracy. They're slow moving, and that's, I think, what we saw happen to 2021 DAOs. They're member owned or community owned organizations, without any automation, with a lot of humans trying to manage the thing by committee, and ultimately that was slow, not competitive, didn't work. DAOs 2.0, I think, will go back to this original definition where we will have automation at the center. the automation will be the result of improvements in both blockchain, smart contract blockchains, and AI. And I mentioned earlier, I think we're going to see an explosion in the number of agents. These agents need things from humans, right? They're automating things, but they also need things from humans at the edges that they can't automate themselves. And the opportunity with crypto is to incentivize humans at the edges to contribute what the agents need. And so, in short, I think the opportunity is to finally realize the original definition of DAO, what I've been calling DAO 2.0, which is real automation at the center, specifically AI at the center, and AI paying humans at the edges to do work that the automaton itself cannot do. And, actively looking for people working on this. We've got one investment, which is kind of a cute example of this, called Botto, which is a AI artist, right? And it's incentivizing humans at the edges to contribute to training its model in terms of what art it should produce and so on. But I think the idea is much, much broader than that. Essentially, any economic activity that can be automated and needs human input could be structured as a DAO. And so I think we will realize that idea in the fullness of time. And maybe we're just getting started now that the two technologies are more mature.
And so a DAO becomes, in that respect, sort of a pool of human laborers for the AI to tap. And the reason it's useful for there to be a DAO structure is that, I don't know, you don't want to have to keep finding people each new time you need this help. You have some consistent flow of work that needs humans.
First of all, anyone can contribute, right? As you said, it's permissionless. Anyone can contribute. And that's true because the agent is using, a global permissionless rail, which is crypto, where you can pay anyone. You can kind of, structure your incentives in a transparent, reliable way. And so, yeah, that's, I think that's always been the opportunity, is you can have this automaton kind of incentivizing humans. And by the way, the original DAO, and I think, this fits the definition of DAO 2.0 that I'm offering, is Bitcoin, right? Like, Bitcoin is this core protocol where at the center, you have this automation, which is, solving this very complex hashing algorithm, and then paying the humans at the edges who are running that hashing algorithm for you, for the network, with Bitcoin, incentivizing them to secure the network. So Bitcoin is the original DAO, and it's, it's what we should be getting back to with DAOs 2.0. There's no AI in Bitcoin, but it's,
yes,
it is fully deterministic and automated at the center, and there's humans at the edges who are making it all work.
Amazing. Well, with that, I'd love to get into our sort of wrap-up questions, which are on the more abstract side. To start, if you had unlimited resources and no operational constraints, what is an experiment you'd like to run?
I love the freedom of the question, and so the answer I came up with has actually nothing to do with crypto. And I'd say I'm obsessed. I've got a green thumb, and if I had unlimited resources and no operational constraints, what I'd love to experiment with is just planting trees at mass scale in urban environments. I think, like, it would be an amazing experiment to see kind of the effect that can have. This was, by the way, in part inspired by my own kind of interest, but also Paul Graham had a great post around planting trees in small towns and how it can impact.
No kidding.
Just like, there was some study done, I think, that planting trees actually increase the economic productivity of
Wow, no way.
towns.
Huh.
So totally random, but like, that's what came to mind when I thought about this. It's, if I had unlimited resources and no operational constraints, meaning I had all the time in the world, like, I think that would be a really productive experiment to run at scale, huge scale.
I love that idea. What's the closest you've seen to that in a cityscape? Like, is there any city that you're like, wow, they actually have done a really good job at this?
I gotta say, I think New York has been doing a really good job. They've been planting a lot of trees there. I think there's some plan to plant a quote unquote urban forest, so they're like scaling it up now. But you know what? The no operational constraints and unlimited resources are key here, because I haven't dug that deep into it. To be perfectly honest, looked into it in a small town where my wife's family is from, and I was astounded to find that to plant one tree costs $10,000, because, like, on a size town size. And so that got me thinking, like, there's like, that can't there's an opportunity here to fix that.
Yeah, totally. Amazing. Which tradition or practice from another culture or era do you think we should bring back or adopt more widely?
In America, I think there's this little known tradition from way back around the turn of the century, Industrial Revolution, around community ownership or cooperative business structures. So while like the West was getting settled and industrialized, right? Small towns, for example, like in often got their power, their electricity, by virtue of like setting up a cooperative utility company, because that was kind of the only way to fund and manage a utility at small scale. Same thing with agriculture, right? Farmers kind of pooled resources to create kind of a community owned dairy cooperative or something. And today Land of Lakes Butter is like a multi-billion-dollar cooperative. Some of these things have really scaled up. That's a tradition that's I think less studied in America. America being kind of the most capitalist country, when you hear cooperative, very often people immediately jump to, oh, that's kind of socialist, but in fact, like there's a rich tradition of a cooperative tradition in America, and it very often kind of coincided with these kind of small communities that were looking to leverage markets to actually get their product out. Like, I think there's a lot to learn from that, and I do think that crypto has the opportunity to scale up this idea of community ownership to internet scale, particularly if we leverage automation and we leverage free markets and incentives, to enable global participation. So, like, crypto, in short, like combines the best of free market capitalism with this kind of cooperative tradition of community ownership. And I think the result is like we can use market incentives to build networks bigger, faster than ever before.
Fascinating. Okay, final question. If you had the power to assign a book to everyone on Earth to read and understand, what book would you assign?
It's Narrative Economics by Robert Shiller, and it just explains by way of a number of examples how narratives can drive economic outcomes that really change the world. And he gives the example. One of the examples is a crypto example, which is Bitcoin, and it sort of gives the example, all the components of the Bitcoin narrative that have led to its success. And I would say it's Bitcoin's success that has opened up the possibility for all these other networks that, and things like Ethereum and others have followed down that path, and that in turn has enabled all this programmable permissionless innovation on top, like stablecoins and so on. So I think that's a good foundational read for anyone looking to understand the genesis of the crypto space and sort of what could potentially still come.
I love that. I thought non-zero chance you pick Satoshi white paper, and so this is an extra layer that I love that frames it all in a bigger canvas.
The debate, honestly, I had to pick one, so I picked this one. But the runner up was the Ethereum white paper.
Okay.
I'd highly recommend that too. The Ethereum white paper is, I think it reads like a sci-fi novel. It's one of the things that got me so excited about the space. I think a lot of the ideas there are going to come to fruition in the fullness of time. So definitely recommend that as well.
Amazing. Well, Jesse, thank you so much for spending your time with me and talking through so much of this. I really appreciate it, and I really enjoyed it.
Yeah, likewise. Great questions. Thanks for having me.
That's it. Thank you for listening to this episode of the Generalist Podcast. Please subscribe on Apple Podcasts, Spotify, or your preferred podcast app. Ratings and reviews help others discover these discussions, so if you enjoyed the conversation, I'd be grateful if you could take a moment to leave one. For all past episodes and more, visit us at thegeneralist.substack.com. See you next time as we continue to explore the future.